Investors are hungry for restaurant stocks, with the Dow Jones U.S. Restaurants and Bars Index rising 6% in the past 3 months, outpacing both the Dow and the S&P 500. I'm here with Jack Mohr, Director of Research for Jim Cramer's Action Alerts Plus Charitable Trust portfolio. So, Jack, lower gas and energy prices have certainly given a tailwind to restaurant stocks, but that doesn't necessarily mean that everybody's been doing well. So, who's really getting it right?
Well, it's the fresher ingredients, the ones that are focused more on natural and organic to the extent you can within restaurant stocks, because of course it has to be tasty as well. I think Chipotle is the bastion of this. I mean, they're growing at like 30% sales, 20% comparable store sales. And I think the kind of appearance of having fresher ingredients, no antibiotics, and all of these, different elements that make the experience more enticing. I think in a simple menu, you don't have to complicate the menu. And I think those type of shops are outperforming.
Well, you mentioned Chipotle. I know you're a fan of Jack in the Box, which owns Chipotle rival Qdoba, which has been posting really strong results, prompting speculation that Jack in the Box may spin off the chain. So, being as McDonald's may regret its decision to spin off Chipotle about 8 years ago, do you think that would be a wise decision?
I don't know if it's the right decision. I think it's really interesting, but I think Qdoba is such a great brand in and of itself. And as surprising as it is, Jack in the Box and Qdoba as a combination of a company is actually pretty clean, and it's growing at pretty similar paces. Obviously, Qdoba is outpacing that, and it's been a catch-up to Chipotle.
Now, shares of Jack in the Box, though, have risen about 60% in the past 6 months. So what do you tell investors? Can it continue to run? What about those who are worried about chasing it?
I think you can't chase it. As much as I love it, it's tough to chase it. I think you have to wait for. I do believe the restaurants as a whole are going to pull back at some point, and I think it will be a pretty strong pullback because their valuations, where they're trading at, is just so much higher than historical valuations. So I think it's a little stretched. But if there's a 10% pullback in Jack in the Box, I mean, you got to snatch that up because that's a great company, and they'll recover those.
Great, and I know you're a fan of Panera as well. When Panera last reported earnings, the company did issue a disappointing outlook for 2015 that spooked investors, and shares haven't quite recovered since. So how do you feel about the company's initiatives it has planned? What's your view on the stock?
Yeah, so right before they reported, Jim and I took it out of our portfolio because we were a little bit nervous about what the potential guidance. It was a little binary, and it was disappointing. But I think there is a chance to get in now as shares have retreated because the CEO is a visionary, and he has a great vision for the company. They're a tech company that happens to sell restaurant, to be a fast food company as well, and they're very clean, very organic. If you've ever been to the stores, such a welcoming experience. And so I really think there's going to be a lot of affinity that's going to be drawn. I think traffic's going to increase, and I think it's going to be a good investment for 2015, 2016.
Right, so 2 hot restaurant stocks to watch. Thank you so much, Jack Mohr, Director of Research for Action Alerts Plus. And I'm Brittany Umar for The Street.